Hi everyone, welcome back. Shout out to everybody who watched my last GameStop video. Thank you so much. It drastically outperformed the rest of the content on this new channel of mine. If you don't know, my name's Hello Good Game. On here, I'm Hello Good Trades, I guess. That might get a little confusing. And typically, I'm playing Magic: The Gathering Arena for the last like 5 or 6 years now on YouTube, pumping out the content and kind of trade GameStop in the background. And, we see these content creators come and go, and it's like, man, I should probably be doing that. And, well, we finally decided to do just that, picking up the torch for Richard and everyone else, really. Thinking it might be a little bit difficult to have a topic for GameStop every single day, but I'm going to do my best, right? Just kind of recapping everything that, I've been able to absorb in the last couple years as it becomes relevant, or I think of it, right? So if you have any suggestions for content, hit me up in the comments below. I'm really happy to dive into literally anything. Today, we're going to be talking about the power of three, or the AMD pattern. We have accumulation, manipulation, and distribution. I think this might be what GameStop is undergoing currently. We have a couple examples. Most recently, in Ethereum, it played out really nicely because we see, the institutional ownership increasing. We see the dark pool volume, or the off exchange, increasing as well. So what does this mean, right? What is the technical of this fundamental? Because we kind of see, what's happening, but how is that going to play out on the chart for us? I guess is what I mean to say, right? And I think, again, I'm not certain that this is going to be what we'll see play out. So first, just to kind of like get you up to speed as to what it is. Accumulation, smart money is going to gradually build positions during this phase. Price typically moves sideways within a range, bouncing between resistance and support, right? Retail traders will often trade here, putting stops below the the support, and taking profit above the resistance. However, institutions will exploit this clustered liquidity, right, by pushing the price out of the range, whether it's higher or lower. This could be reversed. Obviously, we'll look at another pattern to show that, to trigger all those stop losses and immediately absorb them, right? So they're triggering the stop, but then also buying it from whoever sold it, right? This phase is short-lived and ultimately quite deceptive. So we see that here, right? We see this consolidation phase, and then they push it underneath, and it immediately gets bought up and is back to where it should be, right? And then finally, we have our distribution. Oops. After the manipulation leg to collect liquidity, they're going to exit their positions, and this is going to trigger a rapid price movement, often a breakout that ignores previous support and resistance levels. In a bearish setup, this looks like a sharp decline. In bullish, a swift rally, right? So we see that here, right? So we break back in and then immediately push right through it on our first run, and then again, and then again, and maybe this is it, but probably in again. So a really good example for you here in Ethereum, and I think we even have a whole article if you wanted to really dive into it and learn the ins and outs of it. But it's just this: the AMD, accumulation, manipulation, distribution, and it's going to look. So this would be a bearish one, right? Where it's our accumulation is here, and then it manipulates higher and then distributes down. Or the opposite here, right? Where we have our accumulation, we manipulate down, and then we're going to distribute up, right? So you can take a look at this if you want. Just Google it, AMD pattern. You'll find it, and we see it here on Ethereum on the 1 day, right? But we don't really care about that. We care about GameStop. We go to the 1 day, and a couple different scenarios potentially. We were green on the day, by the way. 0.76% after hours just started. GameStop doesn't trade after hours, or if it does, it really does. Oh, God, I hope it does. Either way, this might be what we have playing out here. So we do have this daily gap I want to fill from the bond offering that dropped down, but that could be its own thing. Let's just grab like a new rectangle here, and then we have our highs and lows. We'll draw that over. This can be purple. And so this could be our accumulation leg, right? And then let's say earnings comes out and the price runs up to the top of this, which coincides with the daily 200 exponential moving average, this red line here, and this bull or bearish order block, which we're definitely going to need to invalidate if we're going anywhere, turn it into a breaker block. But like this is looking like a serious rejection point, right? We've got a couple things here that are scary. So maybe earnings comes out and we run into it, but then we get the earnings drop, right? So we've got this whole leg of accumulation, and then the earnings drop comes out, and we get our manipulation leg into this liquidity, the sell side, on the 1 day below the trend. And now this is where everyone's like, because everyone's going to have their stop loss below this trend line. Don't kid yourself. Don't kid yourself. We talked about this yesterday. We literally drew the trade setup. It's like, okay, your stop loss goes below the trend line. That's how every single trader is going to do it. So if they push it below here, you know, they're going to get everybody stopped out. And then we get the gap fill after on a distribution. I was thinking about this today. So, with that being said, don't hold too many of your option contracts through earnings because it's at a really interesting time. Now, earnings is probably good, but GameStop always dumps on earnings. So maybe we do get the run up into earnings, right? It'd be a good time to reduce our risk, scale out. Maybe it pops a little bit more after earnings. Definitely scale out more. If it fills the gap, God bless. Hello, I'm just kidding. Not one of these guys again. No. That would be cool though. And if we could avoid this, that would be even better. No, I don't necessarily want this to happen, but if it does happen, take advantage of it because it's going to result in a volumetric move in the opposite direction, right? Just my thought of the day. Let me know what you think in the comments below. Is this an AMD pattern? Is it not an AMD pattern? Am I crazy thinking that it's going to run into earnings and then get obliterated down and then go? I know that's probably not what people want to hear, but I'm thinking worst case scenario. This is what we look, and worst case is still a great case. You know, just hold on, it'll go. Let it cook. But maybe it doesn't. You know, maybe this is not what we're looking at. And, you know, we just get a clean breakout and it goes and fills the gap as well. So that could definitely potentially be. I don't think we've had earnings release yet. I don't think we know the date. 16 days is an estimate. Not very many trading days in that. Just a few left. So going long on some option contracts. Yesterday, they've gone up a little bit today. Really nothing worth going over. I don't even know if I saved them, to be honest. Did we? No. And I wasn't really logged in either. I don't think we have more of these. Anyways, I'll go back and grab that position yesterday that we built and get the link from it. I don't think I saved it, so I'll have to rebuild it. But I don't think things have changed much. Like we just Yahoo quickly. 17th. And then I even so we can just look at the video here and compare. Looking at the 20s for 404, and these were down today. Okay, we can actually just see the change. So these were a little bit down today, which is interesting. 22s were down as well. It's probably just a weird, there's not any volume here. No volume on the 20s either. So it's more of like a bid ask problem, right? The spread is quite wide. So when someone sells one, it's like they really bring the price down, right? When someone buys one, it really like, see how these are up. That's because someone bought one of these. No volume today, really. The 25s people are kind of playing with. 21s people are kind of playing with. Nothing really. Let's move in. Not really any volume here either. We're seeing some volume here. Not like, I mean, that's nothing. It's literally nothing. What are these 25s? Yeah. September 19th, 25s. Okay, I mean, they're after earnings. That's actually a bit of volume. It's like 1/5 of the total. Let's move in a little bit further. Yeah, less, far less, far less. People are like, you don't want to play this quick into it. I don't think. Someone is loading up here. Like that's kind of 25s, 27s, and 30s. But these are like all way down on the day. Maybe they're selling them. I wouldn't be buying this close. September 5th's way too close. This isn't earnings supposed to be on the 3rd. So this would be just viable. But then you're losing all your theta while we wait for expiry. So typically you want to buy more time, right? Because as your theta decays, you're not really left with much of a contract. So that's why I'm looking at, and they're cheaper, sure. You know, this 25 is worth $30 in comparison to this October 25, which is worth $340, right? So it's quite a bit different. Oh, sorry. October 25, $164. But still, you know, much more expensive. But you don't need to hold this, right? You're not spending all the theta each day, because you're still selling it on September 2nd or 3rd or 4th, right? If you do hold some of them through earnings. So it's just like insurance. It's okay to pay extra for a contract or that time decay because it's not a linear decay. It's like exponential, the way it curves off or whatever. So you don't really want to be holding it in the second half of its lifespan, if that makes sense. We could go more into options if you guys would like. I probably have to get like a whiteboard up to I'm a very like visual learner. Like you see me even over. I wanted to do it in the gray box here, even like, you know, it's a decayed curve, but maybe that's something we do into the future. Mostly just kind of looking at options volume here. I don't know if we go, like, I don't know if anyone's playing January. It's like that's kind of far out. Yeah, not a lot of volume here either. I think really that October is the sweet spot people are kind of targeting here. Maybe a little bit in. 26 didn't have much. Just got to recap again. Yeah, October 17th, September 19th. These look like the big days here. People targeting 20 to 25. Upper band of 30, but I really wouldn't push it unless they're just like, do the majority of your position in the money, and then like 80% in the money, and then you do like 10% at the money, and maybe 10% out of the money or something, right? As far as how you're putting that around. I don't really have anything else today. Just the AMD pattern. I think that's what we're witnessing here. Again, here it is on Ethereum on the 1 day. And I think potentially we have that forming on GameStop, where we have their earnings run up, rejects, and then it's like, time to go. Thanks for watching. Have a great day. I'll see you soon in the next. If you have any ideas for what we can do for a video, let me know. Happy to do anything. I'll dive into whatever specific it is, as long as it's, relevant to GameStop. Cheers. Have a great day, and I'll see you tomorrow.